through your views as always. There's what, 15-16 minutes to go for market closing, and the situation is, I mean, not vastly improved. It's not worsened as well. 100 points lower, 1755 on the index. Jay Bala is with us of cashthechaos.com. Jay, good to have you with us here. I think we missed our weekly appointment last week. I think it was a holiday, Tuesday,
Holi.
last holiday, right? Holi,
Holi.
yes. And I wasn't there either. But, how are things looking, Jay? We had a faint hint of a bounce, right? Towards the end of the week before last, and then of course we had issues starting Wednesday last week, which continue to this day. What's your sense on the index to begin with?
Hi, Prashant. Thanks for having me on the show. See, I had highlighted 2 weeks back that, the bounces are likely to be fleeting, and, maximum could be about 17,700, and the market went closer to 17,800, and it's no surprise that they have started going down the way and behaving the way it is. The price action is consistent with the expansionary phase for the market, and we are likely to see more red, not because it's going to be the Ides of March, but because it's consistent with the Elliott wave pattern, which is we have entered the strongest middle portion of the pattern, which is the longest and the strongest. So we're going to see more red days for the markets, and so long as we are only seeing 1% down days, it's good for the market from a bearish perspective, because people are still not capitulating. So once we have the big red days, only then the probability of capitulation they appear. And the significant support for Nifty is at about 16,750. We have some intermediate support about 16,934, but I don't think that's going to hold. And the bounces are going to be even more temporary, than what we saw last week. So we're going to see a continuation of what we've seen.
And so the Nifty is headed to levels of 16,750, and that's where we could find some intermediate bottom for our markets. What about the Nifty Bank?
See, the Nifty Bank has had a fresh breakdown yesterday, and it's been in a narrow range, and that range has broken down. I had highlighted 2 weeks ago that not to get misled by the fact that Bank Nifty hasn't broken the budget day low. It's just a deception, and market has once again proved exactly that. It trapped a lot of people into believing that the Bank Nifty is an outperformer, and right now we have got a break below the budget day low. And we have some big patterns shaping up for frontline banks like Kotak Bank, ICICI, and SBI. So we're going to see 37,000 in the near term, and much lower levels in the medium term.
So you're looking at lower levels on the Nifty Bank as well. Sorry, I missed the level. How much lower from here, would you say? Actually, both for the Nifty and the Bank Nifty, Jay?
Yeah, from the short term for Nifty, I'm expecting 16,750, and also probably that will also give way, and 16,400. But 16,750 will be a point of realization for a lot of people, because that's the September low. Some of the people would have already noticed the fact that market went below 17,255 and clocked lower low. That would have actually made them a little more uncomfortable. But 16,750 is a point of recognition, and the markets are going to go below that. But when it comes to the banking index, somewhere about 37,300 is the next support, and that's where I think in the short term it's heading. In the medium term, I've pointed out that for both Nifty and Bank Nifty, they need to go close to the June 2022 low, and for the Nifty, it will probably break below that. The banking index need not break, but it can also break below that.
Okay, now come to the, we'll get back to other sectors, etc. But just a bit on global, right? Because that has been such a big driver. But one is not sure in what way is our global markets impacting us. I mean, so yields have fallen from, the 2-year has fallen from 5% last week to 4%. I think your view is, but no, you got a view on the 10-year, not the 2-year. So tell us, Jay, what's the put it comprehensively, what's your view? Global markets.
See, since we just crossed the Oscar season, we can use a little bit of Hollywood reference. In Hollywood, they say gentlemen prefer blondes, but in the stock markets, gentlemen refer to the bonds. So, the bond markets, people are of the opinion that Fed is going to pivot, and because of that, that's going to turn the market bullish. But if you refer to the last 50 years of history, the worst of the declines for the stock markets have always come after the Fed has pivoted. So, if people are placing hopes on that, it's a misconception. It's thoroughly misplaced. And the 10-year yields and the 2-year yields have given up some of their strength. But I think the 10-year yields is going to hold above 430 bips, and it's continued to go above the fresh 52-week highs. In the event that it were to given, it doesn't change the medium-term picture. It just changes the short-term picture. So, bond markets are still saying, to my opinion, pointing to higher rates. So when it comes to the global equity markets, the Nasdaq, barring the Nasdaq, all the major indices in the US are trading below critical supports, and the outperforming European markets have registered a reversal signature. So we're going to get more pressure from the global equity markets.
Okay, if I could just try and find some optimism here, Prashant, if what Jay says plays out, bond yields are going higher, rates are going higher, that means the Fed keeps hiking, which at least means we don't have a banking crisis, right? So I don't know what's better or worse, but just try to pick the silver lining.
Said, let me use some Oscar reference. I thought he's going to take off after Natu Natu and sing something for us, Jay.
Yeah, I'm sure. Yeah, I'm sure Kiravani has come up with much better songs. It just caught the attention of the Hollywood folks there.
All right, should we let Jay go or should we make him sing? Should we let him go? Jay, thanks very much. It's always a pleasure. Great having you with us here. And it's a good chat, always. We'll, although it's not very good news as telegraphed by Jay, things are looking quite weak. 100 points lower, 17,052 is where we're at. We take that break. We're back on the other side. More on markets. 9 minutes to go for close.